Hi friends, welcome to today's video. Today's video is basically on a very popular and an important indicator, which is a moving average indicator. In this video, it's going to be a little lengthy video because we are going to explain you in detail about the indicator. Basically, it gives you a complete, you know, details about how do we use that indicator for our trading strategy, because you could be a intraday player, you could be a swing trader, or you could be a positional trader. How basically you will have to use this indicator for your trading strategies. So this will be explained in a practical way, and we'll also understand the importance of this moving average indicator. What basically, or what is the how is it used in a practical way, and what is that what is the importance of this indicator, and how does it help you in your trading strategies. So that is going to be explained in this video. So instead of going and calculating how do we calculate and all that, instead of that we will learn in a practical way how to use it. So as it is readily available on your all the charts, you will only have to learn how do you plot it and what is the input. That is, you will have to select which moving average on which time frame for your trading strategies are going to be explained. So let's get started with the video. Basically, moving averages, when you're talking about this indicator, there are couple of things which you will learn. So be it a SMA, which is a simple moving average, be it a EMA, you've heard about so many DMA, WMA, all this. So let's basically understand this is all SME or MA is nothing but one and the same. Okay, it's a simple moving averages. Just to tell you how has it been calculated. Say if you're plotting any particular price data, so you have an input data of the latest 5 days, last 5 days ka data, the prices you mean you see, you will the closing prices of the last 5 days has been taken, divided by the number of days, that is 5 days. So this is how it has been taken. So that's a simple average. How do you count? It's a similar way. So that is nothing but a simple moving average. In this video we are talking much about EMA because it's widely used. So practically we will learn about it, how do you use it in the charts. Okay, so let's understand. Let's jump into the charts to view how this moving average indicator looks like and what is the details about it. Okay, so I'm just moving on to the chart. So you take any particular script. How do you plot it is, you'll have to just go to indicators here on the top, and this indicator can be used on any time frame for that matter. So you can just go into that and you can just type in moving average. Just click onto it. Close this. You can view there is a line which is being plotted here. Okay, so now let's see what are the inputs of it. So I'll just click onto the settings. Whenever you're using moving averages, when you just plot it, it gives you a default setting. So you will always have to change your settings according to your trading strategies. Okay, so I'll just click on to the settings. First go to the styles and change the color of the and when you come to inputs, don't change anything other than the length. So currently, as I said, the default one they have taken as 9 here. Okay, and the closing, as I said, the closing prices. So you can just say okay to it. So this is how you will be able to plot the moving averages. So I'll just show you, like, just kindly observe the line here. If I change the time, the length, how does it changes? Now I have given 50, so it is 50 MA. So you can see how the line changes here. Now if I say I give a lesser time frame, so I get 20, you can see the changes in the curve of the line according to the length what you give. So let's moving forward, let's understand as to what is the importance of this indicator. How does it help you in your tradings? Okay, so let's understand what is the use of a moving average. First thing, they provide is a support and resistance. So they provide support and resistance, and the second thing which they provide is crossover. So let's understand the first use, that is the support and resistance. So how do you understand where is it providing a support or a resistance? So let's get into the chart to see it. So if you see, I've taken a moving averages. Let me change this to as 50. When I'm talking about the length 50, it is basically that it takes a data of a 50 candle to show you, to plot the moving average line. So if I change the data to 200, it is simply means to say it is taking a 200 candles. Okay, so let me show you the how does it work on a support and resistance. So how do you say it is a support or it is a resistance? So in an uptrend, it is considered when the market is an uptrend, it acts as a support. So let me show you here. See, it was in an uptrend. It was in an uptrend. Whenever it is closing to whenever it comes closer to this moving averages, it is taking a support and moving. So this is acting as a support here. Okay. Similarly, if you consider in a downtrend, so this acts as a resistance. So let me take a little lesser time frame to show you on an easier basis. So basically this moving average gives you a support. It acts as a support in the uptrend. Now if you see this, whenever it is coming closer to the moving averages, it is taking a support. So basically it gives a support it acts as a support in the uptrend, and it acts as a resistance when it comes to a downtrend. So let me show you one example in the downtrend as well. See, you can find when it is moving down, whenever it is coming closer to the moving average line, you can see this is acting as a resistance and it is not allowing it to move further up. So this is how it provides a support and a resistance. So let's understand now as to what is the difference between a moving average, that is a simple moving average, and an exponential moving average. As I said, whatever the data input we are giving here, it's considered to be number of candles of that. So simple average is nothing but, as I said, it is considering the total. When I say 50 here, it is considering the 50 candles. The data of the 50 candles is taken divided by 50, the number. So this is a simple average. How do you calculate? For example, say if you have different fruits in a basket, so you will pick the prices of all the fruits, you will total the sum divided by number of fruits in a basket. So that becomes the average price of each fruit, right? Now, but this is how the simple average is calculated. But now if you say exponential, how does it make a difference? Yes, how does it make a difference is, in a simple moving average, it doesn't give weightage or the importance to it is The importance is given to each and every candle, all the candles there on the data what you've given. But exponential average basically gives the importance or the weightage to the candles, that is current candles. That is, say if I say 50 length if I have taken, it gives more weightage to the 50th, then less weightage to 49, 48, 47, 40. This goes on. So this is the basic difference as to what is the simple and a exponential moving average. As I said, it is always better to use a exponential moving average. Yes, so far we have understood like how do you plot a different moving average and how does it act as a support and resistance. Now let's move on to the crossovers. So what basically means the crossover is you are just adding a two moving averages, and how does it generate a trade signal? So let's see onto it. Okay, I've added one moving average, so I'll add one more moving average here. So this time you're taking exponential moving average. Okay, similarly we'll take one more exponential moving average. So what do you do first? Once you will have to change the settings. So the first thing, you'll change the color of it. So I'm just giving this, and here I'm going to teach you the two moving averages which are widely used and which is most popular ones. One is a 50 moving averages, and the other one is 200 moving average. So we'll plot the first one, that is 50, and we are also changing the second one to be as 200, and we are giving this as, say, this color. And as I said, this moving averages can be plotted to any different time frame. So depending on your trading style, your trading pattern, you will select the time frame accordingly to plot out this. So let me change this to a 15 minutes. So let's understand. See, now now tell me which is the 50-day moving average and a 200 moving average. Looking at this, obviously the one which is close to the price is the short-term moving average, and the one which is far to the price is a long-term moving average. Okay, this is the 50 and this is 200. So whenever you're plotting like this, here you come, see, whenever the 50 moving average is crossed over the 200 moving average, whenever the shorter moving average crossovers the longer moving average, a buy is generated. That is a bullish crossover strategy. This is also considered to be a golden crossover. So whenever the 50 moving average cuts and moves above a 200 moving average, it's also considered as a golden crossover. So this gives you what? A buy crossover strategy. So you can see once it is cut and moved up, you can see the price is moved up. If you see from here, 15,700 40 levels to 16,000. So that is the up move what it is given after the bullish crossover has happened. So what is it? It's a golden crossover. And again, the price drops, right? You can see at a 50-day moving average, it didn't take a support. Once it moves to 200-day moving average, you can see it took a support again. It started moving average. Here it took a support at 50-day moving average. Let me tell you friends, this moving average, apart from giving you support, resistance, trade signals like the crossovers, you can also use it as a stop losses. So this works and that also. So once you plot it and backtest it on a different time frames according to your trading styles, you will get to know, like, it gives you that you will be able to understand the charts better. Okay, so as I said, once it gives you a support and resistance, it gives you a trading signals, and also this could act as a, you will be able to make stop losses also on based on this. So this is how you can take a call on that. So hope you understood what is a golden crossover. It's nothing but a smaller time frame ka moving averages is cutting a longer time frame moving average. That is the 50-day moving average is cutting down to and taking a, so this is on a say 15 minutes chart. Now if you're, say for example, if you're a, and you can see the crossover doesn't happen in a day. Okay, if you see this crossover, this took around, say, somewhere here, that is on 4th of July. But for the targets to be achieved, it might take a day's time, or say more than that as well. So this is basically useful for what do you say, a swing trader or a BTST traders. Of course, a positional traders, this is a very good buy signal because they're getting a good number of target also. If you're a intraday, how do you do that? If you're an intraday trader, how do you take this strategy working for you? So in that case, what you do is you will consider the 50-day moving average. Okay, you can take a 50-day moving average. Let's see in this day. If you see on this day, once the price took over a 50-day moving average of, you can come here. See, once the price took over with a good candle, with a strong green candle, and crossed over the 50-day moving average, in an intraday you can find it is given a good signal of buy. So if you're a day trader also, you can use this. Okay, you can use this 50-day moving average instead of using a crossover. You can use this, and this actually works when there is a good amount of volume also generated at this particular crossover. If there is a good volume and a good bullish candle, of course it would move up. Okay, so if you can take a buy here and you can test the strategy. If it moves, if it crossovers this below, you can consider this being a stop loss, and you can exit out of your strategy. So basically, if you are intraday trader, as I said, you can use the 50-day moving average and take a call on it. Or if you are a positional trader or a swing trader, as I said, you can use this crossover. So this, if at all, if a 50-day moving average is crossing over the 200 moving average from the bottom of the chart, it's a bullish signal. If the same happens from on the top, if the 50-day moving average crossovers the 200 EMA from the top, then it is being a bearish signal. So let's see in this chart if we can find that crossover. Yes, you can find a 50-day moving average crossovering 200 moving average. You can see there is a fall after that, and you can also see whenever it is moving to this, it is just pushing back. It is acting as a resistance here. Yes, hope you understood what is a crossover all about now. Basically, it is the 50-day moving average cutting on from the lower side 200 moving average, that gives you a buy, that is a bullish signals. And if it is on the top and it is cutting down, it is a sell signal. So on what time frame you are using it? Either you are using, if you are a swing trader, positional traders, on a daily chart, or if you are again on a 15 minutes chart, you are using it. But now if you're a intraday trader and if you want to use a EMI, which is the moving average you want to use, as widely used, 20-day moving average is widely used. So I'll just remove one and show you. I'll consider this as a 20-day. You can find whenever it is, when the price is dropping below the, if you consider this, see, once the price cut down the moving average, you can see it is given a breakout on the downside. Similarly, you can take it on a upside. So you can consider the previous candles ka low, or consider the demand and supply zone of it, and you can keep a stop loss accordingly. So this is for a, sorry, if you will have to change it to a 5 minutes chart. Okay, you can use this a 20-day moving average on a 5 minutes chart. You can see once the crossover happen with a good green candle, you can see the how the stock is moved or Nifty is moved. Yeah, you can consider this for a intraday if you are doing it. Now say if you want to do on a so the first what we saw was a 50 and 200-day moving average, which is used on a 15 minutes chart on a or a daily chart, and this 20-day moving average you're using it on a 5 minutes chart, or if you want a better signal you can also use it on a 15 minutes chart. Yeah, if you want to get a clear signal and then take a trade, maybe you can use, but on a 15-day 5 minutes ka candle, to get much of a, you can see there's no more number of candles here. As it is, it's 5 minutes candles. Okay, this one, and one more which is widely used moving average is 8 and 55. Okay, you can use that as well. So you can consider a crossover of 8 moving average over the 55 moving average. So that also be considered. So that also you can use, but use that on a longer time frame, that is say an hourly chart. So use it on a hourly chart to get a trading signal. Hope this video was useful. If you're new to our channel, please do subscribe. If you like, give us a like and comment if you have something to say about it. Thank you so much. Happy trading.